Hello and welcome to Pro Trader Strategies. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman. I'm with ProTraderStrategies.com and WolfmanOptions.com. I'm here to teach you guys some different option strategies that you can implement into your portfolios, but please do that in your own way. Also remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, with that out of the way, let's get it on with some economic data. Across the pond, we got Great Britain's CPI, Consumer Price Index, year over year coming in at 2%. That's right in line with what's expected. So not a whole lot there. Then we got the PPI, Producer Price Input, coming in unchanged, expected to increase by 0.2%. So a little bit lower than expected, meaning prices paid for those for the inputs to the manufacturing process were lower than expected. Although they did revise last month's number up from 1.1% to 1.9%, so a pretty big increase there. And then we look over at the PPI output for Great Britain, and that came in at 0.3%, expected to be 0.2%. Previous month's number came in at right where it was, no revisions there. So what we're seeing there is the PPI input. They were seeing a little bit higher prices, but we're not seeing them pass those really on to the consumer. Maybe a slight uptick in the PPI output this month, but not really making up for what the input increase in cost on some of that stuff was, at least for last month. So that's going to maybe hurt some margins. That could affect some of those businesses. I don't think it's enough to really affect them at this point anyway. And then CBI, industrial order expectations out of Great Britain, not one of the major numbers to look at, but it came in negative 15, expected to be negative 11. And then moving back over here to the United States, we got crude oil inventories expected to be a drawdown of 1.5 million barrels. Well, it was a bigger drawdown, almost double that at 3.1 million barrels. So big drawdown there. And then the rest of the day, we're basically looking for the Fed fund rate decision out of the FOMC. So that's coming out at 2 p.m. Eastern, which coincides with what is that, 11 o'clock on the Pacific side. Anyway, so we're going to be keeping an eye on that. I don't think that anything is going to happen. I don't think they're going to change rates. The one thing people are going to be looking for is the statement and how they are, whether or not they're more hawkish or if they are becoming more dovish, which is where they look to lower interest rates. And that's what a lot of people are expecting, is that they're going to be a little bit more dovish. I don't think it's going to be dovish enough to say that they're going to be cutting rates, though, you guys. So I would not really think that is going to happen in 2019. They may start talking about letting these rates meld for a little bit, but at this point, I don't think that they're going to be at a rush to cut interest rates. All right. Now, we've got crude oil coming off just a little bit, still within that range that we've talked a lot about time and time again, that we want to see crude oil in the low to mid 50s or lower to mid 50s, and that's kind of what we're getting right now. We can see that we're stuck right here between $155 and $50 a barrel, this being $55 and this being $50 a barrel. So we are staying right in there, close to the point of control. We're already seeing prices at the pump go down. That's what we'd like to see for the summer, so that we can get some people traveling, doing some driving across country, spending that money, creating that velocity of money, right? All right, so and then we've got gold futures, 1350-ish, but coming off just a little bit by about $2.50. Not a whole lot to see here today. I think across the board, we're going to see the markets pretty much trade in a tight range until 2 o'clock Eastern, and then that should spin things up a little bit as the market digests what the Fed is trying to put down. All right, and then we've got the VIX moving a little bit higher today because we're seeing a mixed bag in the equities across the board. Dow Jones only up 20 points on the day after yesterday's big rally. We've got the NASDAQ down on the day by about 17 points, reached this value area high, and that's where we're going to start seeing this market see some resistance and start slowing down. We've already punched above, so that push above and creating that extreme feeling above this value area isn't going to be as much. Part of the fact is price was accepted up at these levels. Now, I was expecting us to see this market really kind of turn around and fill in some of this area here. That might not be happening right now. I think that the market is going to start accepting more value up here in and around this area, for the foreseeable future anyway. All right, we've got the E-mini S&Ps. This is where I was expecting them to fill in the volume node right in between here. Remember we got this shift higher in the point of control here for the volume. The volume's gotten shifted up, which means, I like to follow the volume a lot of times. That is where people are putting their money where their mouth is, and that's shifted up. Now, if we get some time moving up, that's going to really move the whole paradigm higher, where people are accepting price higher. That's going to give us room to make a move to the upside and print these in the day session. As you can see, what is that? 29.61. If we go back and we pull that overnight session out, you can see that 29.55 or 56 is the high. So that 61, 5 ticks higher, is printed overnight. That is going to be a target for the day traders or the day session to try and print during the day, because they don't like to leave that stuff hanging out from the overnight, especially on a historical high. They are not going to want that to happen. So we might go up there and print that relatively soon, but I don't really see our market blasting off to the upside unless the FOMC says something really crazy today, like they're going to cut rates very soon. That could really cause the equities to rally higher, and the treasuries. Probably everything across the board would start rallying at that point. All right, anyway, we've got the E-mini S&Ps in negative territory. It could be a bit of a shift out of tech and into the blue chips, like for the Dow Jones. That's why we're seeing that in positive territory. We're seeing the bonds have elevated volatility, and the equities are going to feel some of that volatility as well in and around a binary event. Well, usually we talk about equities having a binary event around their earnings. Well, the FOMC is another type of binary event that we're going to have to keep our eye out on, because the market is trying to pressure the FOMC to lower interest rates. That's why we're rallying. That's one of those things. Remember, bad economic data is good for the equities right now, because they are trying to signal to the Fed that they need to cut rates, right? So if they don't, and they continue to talk hawkish, we could actually see the equities have a significant drop today and tomorrow, really. And that's about it. I haven't done a whole lot in my portfolio, because I'm waiting on this rate cut, this rate decision, just like everybody else. No, I do not think they're going to cut rates, and everything else is actually turned back around for today. So I'm going to sit on it and wait for this meeting as well. And that's all I got. Not a whole lot to talk about. Sorry, you guys. Tomorrow, though, we are going to be doing a webinar where we come up with a market bias, and then we build a strategy around that according to my rules, and we're going to check that out. My rules aren't rules as to you have to do this, have to do that. What it is it's my set of rules for each strategy. You need to follow that in order to implement that strategy, is all that really is. And it makes it a little bit easier for you guys to follow those steps and then come up with the right strategy for that environment. So check it out at Pro Trader Strategies, and if you can't take that, take it easy.